What's going on, traders? Welcome back to another week. Welcome back to another Money Monday. If you guys are new here, my name is Xander with Facer Trading Academy. We do these videos every single Monday night. What we do is we go over the key economic data that's being released. We go over the technicals on the charts, and we go over the earnings that are going to be released for the upcoming week. Give you guys an idea of what's happening in the markets, give you an idea of what we're seeing from technical analysis on the charts, and hopefully you guys can find that valuable enough to help you make trading decisions, as well as take into consideration what we're looking at in terms of technical analysis to help you identify potential opportunities or risks associated with certain positions. So let's go ahead and jump right on into it. The first thing we want to talk about is the key economic data that's being released this week. We've had some released this Monday, and then we do have a couple more things released throughout the week, but it's pretty light in terms of economic data. The reason we want to go over the data first is so that when we're looking at the chart, you guys can be able to connect the two as far as what's been released and what's going to be released and how that reflects to the charts and to the technical analysis that we're doing. So go ahead and look up Monday. The first thing we're seeing is services PMI that came in lower than expected at 54.9%. or 54.9, 55.1 was expected. That's the first important one that we were paying attention to. The second one was the ISM non-manufacturing PMI that came in at 50.3, 51.8 was expected. Again, came in worse than expected. And so if you guys look at the charts, and we're going to look at them later on in this video, if we look at the charts, we actually see that reflected in today's performance on Monday. And so, that's just one thing to pay attention to. Tuesday, we don't really have too much going on. We have the EIA short-term energy outlook being released at 12 noon Pacific Standard Time. Wednesday, what we have is crude oil inventories. That's the big one to pay attention to. That's going to be released at 10:30 p.m. or 10:30 a.m. Pacific Standard Time. And then trade balance for the month of April is going to be an interesting one to pay attention to, along with exports and imports. That's pretty much it for Wednesday. Thursday, we have initial jobless claims at 8:30 in the morning, continuing jobless claims at 8:30 in the morning as well. And that is for Thursday. That's pretty much it. Fed balance sheet and the reserve balance with Federal Reserve banks. Those are going to be two important ones just to pay attention to in terms of information. I don't expect they're going to move the market, but they're interesting to pay attention to. And then Friday, we don't really have much going on Friday. We usually have speakers or something like that going on, but this Friday, we don't really have much going on. So again, a pretty light week to pay attention to. I'm going to go ahead and link this link specifically in the description below so you guys can access it as well and add that to something that you guys pay attention to as you guys trade. You guys do want to make sure to change the time zone to be in the time zone that you're changing or in the time zone that you're trading in, and then filter it out to just the US. That way you guys don't see every other country that's going to be reporting their specific economic data. So that's going to be pretty much it for economic data this week. Let's go ahead and jump into the chart so that you guys can have an idea as to where we're at from a technical standpoint and what to really expect. So last week we actually had the debt ceiling being approved. And so that ended up causing the market to spike quite a bit. And so we've been seeing kind of a push to the upside. But one thing I do want you guys to note, let me go ahead and get a drawing tool so that you guys can see what I'm talking about, is the first thing I want you guys to know is this dotted line right here that you guys are seeing. And it actually starts right over here at this orange line, which is the mean. And then we have the +1 standard deviation, which is that first dotted line. And the second one is +2 standard deviations. And then to the downside, we have the same thing, but it's -1 and -2. And then we have -3 and then +3 right all the way up there. So I want you guys to note that if you guys do know how standard deviations work, the further we get away from the mean, the less probability is that we're going to stay up there, right? And so at +2 standard deviation, we're at a very high risk of getting rejected and pushed down to the downside. It's not to say that we can't go up to this 370 zone right up here. And have that be a resistance. And that is actually a resistance from April of last year. So that could be a resistance if we continue to push up to the upside. And that would align with this +3 standard deviations line right up here. But I do anticipate that we will start seeing some resistance coming in here at +2. +2 is quite significant, right? +1, we can consolidate as we've seen before. We can consolidate next to it at +1. We can consolidate around -1 down here. where we've seen some consolidation right over here at -1. But we do tend to always return to this mean line. So I want you guys to consider the fact of how overbought we are by looking at the relative strength index. We're significantly overbought, and we're looking at a daily chart, right? So this is a top-down analysis from the daily to smaller time frames, right? And then on the MACD, we're also starting to see convergence, right, of the moving averages. We're seeing a change from green to purple, which indicates to us that we are starting to lose momentum, and the moving averages are beginning to converge on themselves, right? So combine all of that together with the fact that, you know, we no longer have the debt ceiling kind of euphoria going on anymore because it has already passed. We talked about this last week that after it does pass, we might actually see a pullback, because that was really what was driving the market to the upside, is the excitement around the fact that we do pass the debt ceiling limit. And that happened, right? And now we're at this +2 standard deviation. We are extremely overbought on the daily chart, and we are starting to see a convergence on the moving averages, right? And so combining all of that, that is a lot of confluences that are actually telling us that we should be more cautious than, you know, excited about seeing more upside. And we've seen a very good run move up to the upside, right? So let's go ahead and clear this up. And give you guys a measurement in terms of where we're at percentage wise, what we've seen move so far. So after this consolidation period, let's go ahead and measure it from this point on. And we've actually seen about 10.78% here on QQQ, which is the NASDAQ 100, right? And it correlates very similarly to the S&P 500. So regardless of what you're paying attention to, they pretty much act very similarly most of the time. So again, 10.87% so far. So without seeing much of a pullback whatsoever, we also have a gap fill zone right over here between 336 and 332. So that still needs to get filled. So add that on top of all of those four confluences that we see that are telling us that we are extremely overbought, and going long is a very highly risky play to make. So in our opinion, we're going to be looking at a position in a short position, and that's what we expect to see happen in the coming days and the coming weeks, as we actually anticipate seeing a pullback. So let me go ahead and kind of draw out a couple of scenarios that we might see here. We might see this rejection start taking place as we did today, which was Monday. We actually saw a rejection happen here beginning on this first Monday, right? We're starting to see a pullback happen halfway through the day. So we might end up seeing a rejection and a come down all the way down to this 338 zone approximately and find support here. I would anticipate we do fill this level right here. So come down to 332 just to fill that gap, and might see a bounce here. So that is the first scenario if we do continue to see a push up to the upside. The second scenario that we might see is going to be a continuation to this 370 zone and a rejection at this 370 zone to the downside. This is a more unlikely scenario. I do anticipate we're probably going to start seeing a sell-off a lot sooner than that, and potential support right over here at that 338, 337 zone. So that's going to be that first level that we're going to be paying attention to as support. Resistance is going to be 370. So this is the second scenario. And then the third scenario is we end up seeing a much bigger sell-off than, you know, even this support level. A bigger sell-off would be something around the likes of us coming down to this 337, 336 zone, breaking through this zone, potentially seeing some consolidation, and then breaking through the zone and heading down to this 315 zone right over here. So that would be the third scenario that we'd be paying attention to. Again, all three are possible. What is the most likely? The most likely one that I anticipate we're going to see is we're going to see a pullback down to at least this 332, 337 zone. And that's just going to be to fill this gap. And then from there on out, I anticipate that we're going to be paying attention to economic data that's going to be released to help us gauge the sentiment moving forward from there. I think for the upcoming week, that is a pretty realistic goal to see. And a couple other things I want you guys to note that are coming up that are also kind of giving me this idea of the fact that we're going to see this pullback besides the technicals, right? This is more from a fundamental side, is on June 13th, we're actually seeing an inflation report coming out, which could come in better than expected, or it could come in worse than expected. We don't know until we see it. But from the technicals, I anticipate that there's going to be a lot of skepticism around it, and we're probably going to see a little bit of a pullback just because of the inflation report coming out. The second thing is June 14th, we actually have an FOMC meeting where they're going to be deciding on upcoming interest rate hikes. And we've seen talks about this coming up of another rate hike that's going to be coming up, which is obviously not going to be good for the markets. So that is also going to probably drive the market to see some sort of pullback. So adding everything together, it's really starting to come in a look that we're going to see a pullback at least to get that gap zone filled, and then possibly even lower to this 315 zone, 311, 310, 315 zone, this general area. And that's going to align not only with the mean, which is what we always tend to come back to, but that's also going to come back to a very strong support where we saw a lot of consolidation before we saw the whole debt ceiling situation break out, and that's what really drove the price to skyrocket, I would say. And so those are the couple things that I want you guys to be paying attention to and considering. Hopefully you guys found this useful and helpful. Just wanted to give you guys a quick update in terms of what our position is. We don't like to predict what the market's going to be doing. Like I said, we did want to prepare for all sorts of scenarios. This is the most likely one that we anticipate to see, and that is a pullback and a drop in the market. And so that is the most likely one that we're paying attention to. That's what we're preparing for. In terms of possibilities going up to the upside, again, 370 is going to be that first level of resistance if we do continue to see more action to the upside. And we're probably going to see a rejection there and a pullback. And that's going to be when we're extremely, extremely overbought. We're already overbought, but we're going to be crazy overbought if we do end up seeing, you know, a push to 370. And that at that point, we're going to be aligned with the +3 standard deviation, this resistance, and the RSI being astronomically overbought. Definitely going to see a rejection at that point. That's for sure. But this is the most likely scenario right over here that I do anticipate us seeing play out. Primarily a pullback to get that gap fill zone within the next week or two throughout this week. So with the key economic data not having anything important to be released this week, I think the excitement, the momentum is going to die off. And I think that we're going to see that pullback happen. So hopefully this was helpful for you guys. Let's go ahead and jump into one more thing that I want to talk about, and that is the earnings that are going to be released this week. So let me go ahead and get that pulled up for you guys. So not, again, just like economic data, we don't have too much important stuff coming out. We have DocuSign that's reporting on Thursday. That's pretty much really the most important one that I would say to pay attention to. NIO on Friday. And then that's pretty much it, really. The rest, I don't think are going to move the market too significantly. An interesting one to pay attention to would be Wednesday after market closes, and that's GameStop. And that's just because of all the excitement that's been around GameStop over the last year and a half, just to see kind of how that performs. But other than that, nothing's too significant that's going to be moving the market to the point where we need to be paying attention to it. So hopefully you guys find that valuable as well. You guys can find this on Earnings Whispers online, or you guys can just Google earnings for the week of June 5th, and that should pop up for you guys. Or you guys can just take a screenshot of this. Hopefully this is helpful for you guys. So hopefully you guys found value in this video. Make sure to smash that like button, subscribe. Again, we do these videos every single Monday. We give you guys an update. We give you guys our take on what we're seeing from a technical standpoint. And then as far as what we expect to see happen, we give you both scenarios, right? So if we do continue to see a push to the upside, what would you expect those levels of resistance that we expect to the upside? And if we see a push down to the downside, what are the most logical and probable levels to pay attention to and consider locking in profits? If you guys want to know what we trade, go ahead and swipe through the channel. There are a couple of videos where we talk about the exact ETF, inverse ETFs that we trade in terms of QQQ and how we trade those, what we pay attention to. So hopefully you guys found value in this video. Smash that like button, subscribe, and I'll see you guys on next week's Stock Talk video.